Dr. Reddy is the top Nifty loser today after third quarter revenue comes in line with estimates, but profit misses estimates. Brokerages cautious on the stock. HSBC says relief from the semaglutide sales won't be sufficient to offset the fall in Revlimid.
HPCL is in the green after posting an inline set of earnings in the third quarter. They came in line with estimates. The LPG under recovery is up 40%, while the refining margin slightly below estimate on lower share of discounted crude.
Signed plunges about 18% in early trade today on the back of a weak quarter. The management cuts its DET revenue growth guidance from flat to negative 2.7%. CEO Karthikeyan Natarajan steps down with immediate effect in 20 months versus his term period of 3 years.
Interglobe Aviation trades in the green as crude prices continue to decline for the sixth straight day, dropping below $78 per barrel mark. The airline is also set to report its third quarter numbers later today.
United Spirits sees some profit booking after reporting its third quarter numbers, which was strong, 11% volume growth in prestige and above segment and close to 6% in the popular segment. All eyes will now be on management's commentary in the third quarter conference call at 4 p.m. today. You're watching us here on Chartbusters on CNBC-TV18. It's been a soft start for the markets right now. The question is where we go from here, largely because over the last few trading sessions, while the lows have been bought into at higher levels, we are seeing some sort of supply coming in from various parts of the market as well. Today, it's the mid-cap index, which is under a wee bit of pressure. I'm Mangalam Malu, with me, Nigel D'Souza. Nigel.
Hi, Mangalam. Yeah, some kind of a bounce from the day's low, so that's good to see. But as you said, at higher levels, we are seeing some kind of supply. I think the two markers on the Nifty are 22,900, 22,950 on the downside, and on the upside, around 23,400. The markers are, both these two levels. That seems like a bit of a goalpost. But let's focus on electricity exchange. IEX reported a good third quarter, marked by 17% gain in net profit, and also volumes did see a bit of an uptake. We're now joined by Rohit Bajaj, the Joint Managing Director of the company. Hi, Mr. Bajaj. Good morning and good to see you. When it appears there are signs of a recovery in your numbers, so the street would like to understand on the volumes parameter first, what kind of a volume growth do you intend to end this year with? And what about FY26? Point number one. Point number two, what about market share? The street was a little bit nervous about you losing market share. You seem to be holding around 85%. Where's that number headed?
Yeah, hi, good morning. So you rightly said the volume picked up in this quarter. We have done well with 17% growth. But if you look at our 9 months number, we are 25% up in terms of overall volume. So certificate segment has been growing pretty well. Electricity segment has been growing pretty well. There were a couple of months where there was some slowdown because of some weather-related event when the demand was not picking up. But on an average basis, for 9 months basis, demand is up 5%, and we are growing at a close to 25%. Going forward, we expect this trend to continue because 6 to 7% growth is what is being predicted for electricity sector going forward for almost next 4-5 years. This year, one good thing has happened. The prices have stabilized. We have seen 26% prices cut in Q3. And overall, if we look for 9 months, the prices have come down by 9%, by almost 16%. So as the prices are coming down, supply situation of coal is improving. Imported coal prices, gas prices have stabilized. We foresee going forward, there would be ample supply available. And when we have more supply, there is tendency amongst buyer to switch their procurement from bilateral contracts to the spot market, which is day-ahead and real-time market on which we operate. So that way, we are hopeful that going forward, this trend will continue. Prices will be in check. Supply is going to be there. Coal India has increased their production by 6% this year, which is more than the overall demand increase or overall utilization increase of the coal-based plant.
Okay.
About market share, yes, we are at 85%. And if you look back, last couple of months, this number is even higher. But yes, after 9 months for this particular year, we are about 85%. And I must say we are in a sweet spot. There are 3 exchanges there. Real-time market and day-ahead market, which is our main markets, where we are getting almost 80% of our total volume from. There we are maintaining 100% market share, and overall it is at 85.
Okay, all right. Just a couple of quick counter questions then. So volume growth for the year, you're looking at more than 20%, right? For FY, you'll end the year with more than 20% for FY25. Is that correct?
Absolutely, because currently we are at 25. So we expect it to close the year 20% plus basis for sure.
And market share will gradually, since you're in a sweet spot, you will continue to gain by close to around 100 basis points on a quarter-to-quarter basis. Is that an objective that you'll have? And also just comment on the electricity demand. I'm looking at power demand. In January, actually, it's been quite subdued. How do you see things panning out?
Yes. So in power demand, we have seen weather patterns are playing very, very important role. So if we look back, Q1 particularly this year, demand increased by 11%. And the reason was there was this acute heat wave in the northern part of the country. If you look at the Q2, the demand increase was very subdued. It was just 0.5%. And the main reason was we had above average monsoon this particular year. At Q3, it started to revive. If I talk about November and December, in both the months, demand increase was close to 5%. And this month particularly, we are seeing 3.5% to 4% till now. But again, the reason is, if we compare with last year, winters are not so severe this time. And there is winter load is not coming up properly. So it is not true reflection of the overall consumption, or you would say overall industrial consumption. This is more driven by weather pattern. And we expect going forward, let's say when the impact of weather would not be there, February, March are generally the months where we do not see neither heat waves nor cold weather. We expect these numbers to improve.
All right, that's a fair point that you make, that power demand is not a true barometer anymore for consumption, more so it is because of the impact that we have on the weather itself. But one of the most important things from an IEX shareholder perspective is what happens with market coupling. I mean, have you given your feedback to the regulator? Is it off the table? How are the tests doing?
Yeah, so as you may be aware that in the month of February, they came out with the order where they directed the system operator, which is Grid India, to develop a software in 2 months and then do the shadow pilot in next 4 months. This was very good move by regulator because they were very cautious. This involves market design change, and they want to be pretty sure about what would be the impact of this. So they have adopted data-driven approach. But so far, the outcome of the report are not yet released. We are not aware what is the final report or whether it has been completed or not. It is underway now. But one thing is sure, the decision would be taken on merit. Now, question remains, if the coupling is to be done for DAM and RTM segment, and one exchange has almost 100% market share, what sort of benefit it will accrue, and what would be the challenges? I think all these aspects regulator will look into before taking any decision.
By when do you expect the decision though? Because this is the sore point. People keep getting nervous every time there's some commentary on coupling. From a stock market perspective, the stock takes a hard knock. So by when should we expect some clarity on this decision, and how strong is the pitch? Because you're saying that if this comes into play, you're not seeing any big benefit for the end user. So, so give us your comment on that.
So, see, it is very difficult to say when it will be done. First of all, I think bigger question is whether it will be taken up. I think that decision will be done on the basis of this shadow pilot. And going forward, when the report will be made public, I think again consultation will be done. Because as I said, it is major change in the market design. And if you are doing that, you have to consult all the stakeholders involved. And as you rightly said, we have to see what sort of benefit it is getting. Because if everything is with one exchange, distributing it in 3, it will not accrue anything. And then there are so many challenges involved. Very difficult to put anything on the timeline, but we expect that something should happen soon so that there is a clarity amongst everyone.
Yeah, we get your point on this one as well, though we will await clarity on that. Just a couple of words before we let you go. One is the growth in the REC business. You recently cut down commission for the REC certificate. So, what's the outlook out here? Are you looking at cutting down commission for power as well? And the IGX business, have you, any growth targets that you can give us for the IGX business over the next couple of quarters and the next year, if you must?
Yeah, so REC side, we have cut down the margin. We did that in the month of August. But the good news here is we are seeing huge volume growth because the prices of REC has come down. So the renewable purchase obligation, many industries are complying now. Many distribution companies are complying now. The compliance overall has increased. We are seeing close to 70-80% volume increase this year till now. And we expect this to go forward, even improve further because the year-end obligation compliance pressure would be there on all the participants.
Okay.
This quarter we have seen good rebound in IGX numbers. IGX number we have seen again very good growth, and we expect this trend will continue because prices have stabilized. In fact,
Yes.
it has come down to the level of $12 to $14. And going forward, as power industry will also start to buy gas, RLNG particularly, we expect some more action going forward.
Yes.
And as the infrastructure developments are happening, more and more PNG stations, more and more LNG stations are being created. So there is going forward definitely great scope for gas exchange.
We appreciate you joining in, Mr. Bajaj, and giving us some clarity. Looking forward to having a chat with you sometime during the quarter. Don't let us wait till the end of the fiscal year so we can get an update with regard to all the issues we just discussed. Wishing you a good day ahead. Well, let's shift focus now to our special segment. We get a few ideas for profit as always from Moneycontrol Pro. Jitendra joins us to help us out with one such stock. Jitendra?
Hi, thanks. Today I'm going to talk about Power Grid, which post recent correction offers huge margin of safety. The company's strong capex plans, massive order pipeline, and of course robust presence in domestic T&D makes it a significant player which is poised for growth. Power Grid's aggressive capex plans underscore its growth potential. Recently, the company raised its FY25 capex guidance to about 20,000 crore with plans to reaching 25 to 30,000 crore by FY26. Over the next 7 years, Power Grid is targeting projects worth rupees 1.5 lakh crore, and which is in line with the National Electricity Plan, with a close to 50% project winning rate so far, and of course the cumulative 3 lakh crore capex opportunity in the domestic market by 2032. The company is well positioned to deliver growth despite near-term financial challenges faced in we saw in Q2, which were impacted due to one of we think the Power Grid's long-term prospects remain good, supported by strong capex and order execution. In second half, execution and margins are supposed to be better, and thus the company is supposed to report decent earnings growth. Stock is trading at 2.7 times FY27 estimated book value, which is quite good considering nearly 5% dividend yield. This makes it an attractive option for those who are looking for safety and decent returns.
All right, with that, we'll take a short break. On the other side, we'll get chatting with Neeraj Sharma, who's the CEO of OneSource Specialty Pharma on the back of their D Street debut. Remember, this is the erstwhile Stelis business that demerged from Strides and now has listed on the bourses. It's a good listing. We will get chatting with the management. Welcome back. You're watching us here on Chartbusters. The D Street debutant today is OneSource Specialty Pharma, the erstwhile Stelis business, which was demerged from Strides and now has relisted. It's at around 1730 odd rupees, settled at around 1800 rupees as well. So the Street is ascribing the market cap of close to around 20,000 crores to this business itself. Neeraj Sharma, who's the CEO of the company, joins in to discuss the company's post-listing financial strategies as well. Thanks a lot, Neeraj, for joining in. Congratulations on the listing of this business, as it were. Just a couple of questions. With the valuation that the Street has ascribed to the company right now, it's factoring in close to around 35 to 37 times EV to EBITDA, assuming it's closer to $60 to $65 million in FY25, EBITDA. Do you think you are going to do that? And from a long-term guidance standpoint, how much could GLP-1 contribute to your overall business?
Mangalam, I'll just, first of all, thank you for having me over. I just, for your information, I think that I want to just tell you that we are in a silent period right now until our results come out next week. So I will, restrict my answers to basically what our business is and our profile is. And I promise I will be able to answer all your questions around our valuation and how it is based upon our numbers when we meet later next week.
But you can still give us qualitative details, Neeraj. The earlier guidance that you had given us was close to around
For
60...
sure, I can tell you. Sure.
Go ahead.
Sure, I can tell you, Mangalam, that we OneSource, we are a very different, very one-of-a-kind CDMO. As a specialty pharma CDMO, the services which we offer, Mangalam, are are very different from any other CDMO today in India. The width of our service offering, going from drug device combinations to biologics to sterile injectables and to oral technologies, there is no other CDMO today in India which is offering end-to-end across these. And how we have built this and the way we have built our customers on these offerings are again very unique. Having these offerings, having the capacities and capabilities to offer these services to our customers, and finally built on a very, very strong track record of quality and compliance. As you know, in our industry, that's pretty rare, right? So these are the pillars on which we build, which we are building OneSource, the capability, capacity, and compliance.
Okay, all right. Hi, Mr. Sharma. Good morning. Welcome to the show, and congratulations on this listing. This is Nigel on this side. From a market perspective, they are interested in the longer term. And we don't want you to give you any numbers in the near term. As you said, you're in silent period. So we're not getting into that space. But in the next 3 to 4 years, you've given out some ambitious guidance. So my question to you is, the calculated number for this year's EBITDA will be roughly around 60 million USD, but don't comment on that. Tell us, since you're expecting the revenue to be around $350 to $400 million in the next 4 years or so, that's FY28 numbers is what I'm trying to get at. Can we assume that the EBITDA number for the company will be around 150 to around 140, 150 million? Would that be a possibility? Point number one, EBITDA number. And as of the last reported number we have, the debt is around 150 million USD, which was supposed to come down to around 100 million. So what's the updated number and trajectory with debt? Debt and EBITDA number for FY28.
Yeah, so what I will happy to tell you, Nigel, that the growth, the ambitious targets which we have given are all based upon the fact, as I said, our service offerings across all these areas. So we are a very strong player, pioneers in the area of drug device combinations, especially around GLP-1s. And as we have seen the growth in GLP-1s and a customer base of who's who of the global generic industry which we have, and the forecast and the way the market is growing, we are very confident that the growth trajectory which we have taken will be achieved simply because of all the way the various patent expiries are coming over the next few years, and our customers who have many of those who have given us their very clear projections and purchase orders. So we are very confident that those numbers and while obviously GLP-1 and that area is our key focus and key driver, but that's not the only driver. We have a very strong business in soft gelatin and sterile injectables, and we see,
Mr. Sharma, sorry to come in, but you're making a lot of sense with regard to the opportunity that's ahead for the company. But from a shareholder perspective, they'll be interested in two numbers, so you could help us out with that. FY28, will the EBITDA number look like around 140 to 150 million dollars? Is that the aspiration? And give us the debt number. Where does it head from the last reported 150 million dollars? Very quickly, sir, two numbers.
Sure. So as I said, without getting into specific number, we have given a very clear guidance. That guidance we are over next 3 to 4 years is what we are maintaining. That it's our business is a very high OPEX leverage business, and we expect the EBITDA margins to be significant at 40% plus in the next 3 to 4 year time period, and that's what I'm happy to say. That's where our business is going up, and the fact that we'll be generating so much cash in that business. So obviously our debt, of course, will be we'll be a company which will be generating our own cash flow significant, and that will how the debt will also move.
All right, we take that point and we'll leave you with the promise of joining us once you report your numbers so that we can quiz you a lot more on those numbers itself, and then we talk about the near term, the medium term, and the long term with regards to the reported numbers and the things that you can say as well. Once again, congratulations on the listing of this business. Wish you good luck for the long term, but a promise to have a conversation in the near term as well. Take a short break, come back. We talk about the markets. The Nifty and the Sensex have just about moved into the green once again. We'll discuss that in just a bit.
Welcome back. The Nifty, as you can see, as flat as can be. The problem is in the mid-cap index. That's down close to 0.7%. But the Nifty Bank as well, absolutely unmoved. So Mangalam, for those who got up late and they've missed the first 1.5 hour of trading action. On the index, they haven't missed much, though on stocks, it's been doing a thing of their own.
The portfolio is looking, not so good, but the index, they get another opportunity to perhaps make a trade if at all they are. It's absolutely flat. We'll wrap up on this edition of Chartbusters. Stay tuned. Trading Hour comes up next.